Good day and welcome to the D-Marq-AnalyticS channel. In this week's video, we will look into an interesting topic, implementing asymmetric risk models to protect your startup against black swan events. When markets crash, most investors panic. They sell at the bottom, freeze, or cling to hope. But a tiny group of elite venture capitalists and institutional allocators quietly do the opposite. They expand, they accumulate, they accelerate. Why? Because they're not playing the same game. They're using a different playbook, one designed for asymmetric outcomes. There is a hidden playbook used by elite venture capitalists to protect their portfolios from total wipeouts during global shocks. While your competitors are busy optimizing for small gains, you should be implementing the asymmetric models that turn catastrophic events into massive growth opportunities. This is the blueprint for surviving and thriving when the rest of the world panics. Today, we're going to walk you through the 5 core components of that playbook. These are the same frameworks used by top-tier funds, sovereign wealth managers, and the most resilient family offices in the world. Let's get into it. Most investors, even smart ones, optimize for stability. They want smooth charts, low volatility, and predictable returns. But here's the truth. Stability is an illusion. The world is built on shocks, pandemics, wars, inflation spikes, liquidity crunches, technological disruptions. The fragile investor breaks under pressure because their system assumes the world will behave. Elite VCs and allocators don't fear volatility. They design around it. They build systems that absorb shocks, adapt to new realities, expand during chaos, exploit dislocations. This is the anti-fragile mindset. You don't just survive disorder, you benefit from it. The goal is simple: small downside, massive upside. This is the foundation of every decision they make. Once you adopt this mindset, the next step is to build the structure that supports it. Elite investors don't spread risk evenly. They build a barbell. Left side, ultra-safe, liquid, durable assets. Right side, high upside, asymmetric bets. Middle, avoided entirely. This creates a portfolio that can't be wiped out, but can still explode upward. The core is built from assets that generate cash, maintain purchasing power, survive recessions, don't rely on optimism. Think high ROIC compounders, essential infrastructure, gold, cash buffers, and low volatility ETFs. The right side of the barbell is where the magic happens. Early stage tech, AI infrastructure, frontier markets, optionality-driven plays, tactical IPO allocations, innovation clusters. These positions are small in size but massive in potential. Because during global shocks, the core protects you. The asymmetric sleeve expands, liquidity lets you buy when others can't. You never become a forced seller. But structure alone isn't enough. You need a system for timing your aggression. Elite investors break crises into 3 phases. 1. Dislocation. Panic, liquidity crunch, forced selling. 1. Transition. Stabilization, policy intervention. 1. Expansion. Recovery, innovation, new winners. Each phase demands a different strategy. This is where amateurs get destroyed. But elite investors increase liquidity, deploy into distressed assets, accumulate high-quality names at 30 to 70% discounts, enter positions they've been waiting years for. They don't guess bottoms, they buy value. This is the smart money accumulation phase. They double down on winners, exit broken models, rebalance into strength, prepare for the innovation wave that follows every crisis. This is where asymmetric bets explode. Historically, the biggest fortunes are made after the dot-com crash, after 2008, after COVID, after liquidity resets, after technological paradigm shifts. Elite investors know that crisis is the entry point, not the exit point. But how do they decide what to buy during these phases? That's where the next section comes in. Elite investors don't chase hype. They ask one question: what will be undeniably bigger in 10 years? Examples: AI infrastructure, cloud compute, cybersecurity, energy transition metals, robotics, digital payments, genomics, space commercialization, water, and food resilience. If the future is inevitable, the only question is, at what price do you enter? An asymmetric opportunity has limited downside, massive upside, a catalyst, a structural tailwind, a clear path to scale, a competitive moat, a liquidity event, or monetization path. This is how elite VCs filter deals. Some companies benefit from crises. Remote work platforms, cybersecurity during geopolitical tension, gold miners during inflation, AI infrastructure during compute shortages, defense tech during conflict, essential goods during supply chain disruptions. Elite investors look for businesses that get stronger when the world gets weaker. Every opportunity must answer, does it strengthen the barbell? Does it increase asymmetry? Does it reduce fragility? Does it align with long-term inevitabilities? If not, it's noise. Now that you know how they identify opportunities, the final step is execution. The final step is execution. Elite investors don't improvise during chaos. They operate with predefined entry rules, predefined exit rules, predefined position sizing, predefined risk limits, predefined liquidity buffers. This eliminates emotional decision-making. Liquidity is the ultimate weapon. It lets you buy when others can't, survive when others drown, act when others freeze. Elite investors never go all in. They focus on high ROIC businesses, durable cash flows, dividend reinvestment, long-term holding periods, avoiding taxes and friction, avoiding unnecessary turnover. The goal is not excitement. The goal is compounding. This is where they take short-term IPO opportunities, catalyst-driven trades, event-driven asymmetry, opportunistic entries during panic, but always with strict separation from the core. Because if you survive every crisis, you eventually own the world. If you want to compete with elite investors, you can't copy their trades, you must copy their frameworks. The world will continue to deliver shocks, but shocks are not the enemy. They are the opportunity. Build the structure, adopt the mindset, execute the playbook, and you'll thrive when others panic. If you found this week's topic helpful in any way, kindly hit the like button and share this video with anyone you think might find it interesting. Please feel free to subscribe if you'd like. We want to thank you all for staying till the end, and we wish you all a wonderful day ahead.